Finally, somebody's going to tell you exactly what you've been wanting to know about life insurance, about how it works, about the strategies, about the simple stuff, about the exotic things, about what it is, what you can do, all that good stuff. Finally, somebody. I know you've been thinking, much how I used to be, man, how come all these insurance agents or financial advisors or wealth gurus or whoever, they always talk about you need to learn about this, learn about that, but no one wants to give you the information. I am going to give you this information, this free video, simple free guide today. And it's only going to take us about 15 minutes to go through it. My name is Joe Walker. I've actually been in the industry about 5 years and counting. And it's crazy how I got into the industry was very simple. I actually was, making good money and doing my job and different things. And I wanted to make more. I found out that making six figures was really not enough money. And I said, you know what, I want to build wealth. So I started going into entrepreneurship, and I actually ended up losing quite a bit of money in entrepreneurship in my car business. I had $100,000. I lost it in a car business, and I lost that within a matter of a year. What made me search for more information on money was this. I started finding out, much like you probably hear all these rumblings about, how the rich don't lose money and how so-and-so doesn't pay taxes, or how they have a lower tax break and all these different things. They hedge their investments, all these different things that's going on. And I said, dude, I got to know what this is. I don't have education on money. Like most people, I know how to make money. I know how to spend money, but I don't know how to build money. And when I started learning, I got introduced to a video about how to create wealth. And I got introduced to a person named Patrick Bet-David. And during watching some of his content and the video, I started learning about the most powerful industry in the world that I had no idea how it worked, because I was only told how to buy things like life insurance through, getting the cheapest policy possible. Or I was only taught about building wealth through just buying real estate. I wasn't taught about how insurance companies work, how life insurance companies work, how these different things work. So when I learned about this information, I said, holy crap, this is amazing information. If, by the way, if I would have knew in 2017 what I know now, and I lost that $100,000 of investment, do you know that by now I would have, just in interest alone from an insurance policy called an Index Universal Life Policy, I would have made $100,000 in net returns off of money I didn't even have. It was lost, it was gone. That's the power of the right information. There is some stuff you're going to learn today, and we're going to take about 15 minutes to go through some simple information through this simple life insurance guide to educate you on how money works. And I can almost guarantee you, after you watch this, you're going to say, you know what? I need to learn a lot more. I probably got to implement some different things, but I'm going to show you the secrets in about 15 minutes. So let's get started. I run a company called New Modern Wealth. This is my company, and we're going to present to you this very simple life insurance guide. Now, our goal in our company is actually very, very simple. This is what we do. We want to educate families on how money works and all type of financial services. What we do that makes us very unique is we market for very big A-rated, A+ rated insurance companies and financial institutions, some that you may know, like American General, AIG, Mutual of Omaha, National Life Group, American National, Fidelity, and much, much more. So that's what we do. But the biggest thing, the same reason why you're watching this right now, is we like to educate people on how money works and financial services. Now, let's talk about one of the biggest things on why you're watching this, because this is a life insurance simple guide. We have to talk about, of course, what is life insurance and how does it work? Now, life insurance is a legal contract between an individual and, of course, business, and an insurance company that provides financial protection for the life of oneself or another person insured. In exchange for the policy owner's regular and timely payments into the policy, the insurance company agrees to pay a benefit upon the death of the insured, according to the terms of the policy. In other words, a lump sum payment, death benefit, is paid to a specified recipient upon the death of the insured. Life insurance may also offer living benefits. This is a key. We're going to talk about this. Some policy features include being able to access money in the policy prior to death, and or being able to use the death benefit to pay for treatment of critical, chronic, or terminal illness. Now, let's actually talk about some policies. The first policy we're going to talk about is the term policy. Now, we like to call this kind of the the Toyota or Honda life insurance world. It's very, very effective. One of the best parts about this policy is that it is very cost effective. Anybody can get it. Now, its advantages are that it's great for mortgage protection. And it also has some options to even, that most people don't know, there is some term options that you can get your money back with certain type of term policies. Now, the disadvantages of a term policy is that for some people, the fact that it expires at a certain time, and then the money does not grow, so it doesn't build any value. So term is kind of like renting a home. You don't really build any equity in it, but at the end of the day, it gives you a place to stay. Term is the best at giving you very, very low cost coverage, and it's great for protecting things like a very big asset like a home. So that's a term policy. The next type of policy that we're going to talk about is the ROP policy. Now, the return of premium policy, there's pretty much two versions. Like it's a term version, and then there's actually something called a guaranteed universal life. There's a version with that where you can actually get your money back. But here is some of the advantages of the ROP. The fact that, of course, it has mortgage protection, much like a term. Mortgage, by the way, mortgage protection is always a great way to buy a reason to buy life insurance. Return of premium, meaning you get your money back. You can actually buy the policy today, and if you don't use it, unlike with the term, if you use it, you lose it. If you don't use it, then you lose it. Well, here you can at least get your money back. And then it kind of got this weird savings component. One of my clients that actually told me, they said, hey, Joe, it's kind of like if I put my money in my premiums in Chase Bank, let's say I put $200 and or $100, right? They put it in there, and then after 30 years, they get $9,600 back after 30 years of putting premiums away, because what, they didn't use the policy, so Chase just saved it for them and gave them their money back. But if something was to happen, Chase would say, hey, I owe your family $100,000, $300,000, $400,000, $500,000, whatever it may be. That's kind of like the ROP. Now, another thing is that it has living benefits. Now, the living benefits is something that we'll discuss much later in the presentation, but living benefits cover things that happen to you while you're alive when you didn't pass away. Now, some disadvantages is the fact that, well, it will expire after a time. And then if you're a certain age, there's ROP benefits that's not offered to people once they get older. Then there is no interest gain. So you are going to put that money away, but with the ROP, it's not going to make money. So you're just going to get the return of premium that you paid into it, but you're not going to make money. But the good thing about the ROP, of course, and the advantage for it is the fact that you can buy a life insurance policy and do what? Still get your return of premiums back. So that's why it's kind of like an upgrade. We talked about the Toyota, Honda, which is like the term, and this is like the Lexus and BMW. It's a upgrade of those economy cars. So great policy. Now let's talk about the third type of policy that we'll talk about today. And this policy, of course, if we talk about Toyotas and Hondas and we talk about Lexus and BMWs, we got to talk about the exotic versions of the life insurance permanent policies. Now, permanent policies, let's just go to the disadvantages off the top. The disadvantage for permanent policies is the fact that the cost, the price, the premium can vary by age. It can vary by health. It can vary drastically by design. There's a lot of things to permanent policies. By the way, there's a lot of misconceptions about permanent policies, but these are great policies if you know. But I tell a lot of my clients and people that I educate that, hey, these can be this could be one of the best assets you ever get in your life, but it could also be one of the worst if you don't have the right education. So lack of proper education on these products is one of the biggest disadvantages. It's essential to understand it. But let's talk about some advantages real quick. Well, in permanent policies, of course, they're good for mortgage protection, but in permanent policies, savings is actually a real part of this. Meaning it's not savings like the ROP, where you have to wait until the 30-year contract or 20-year contract, whatever the contract is. Well, with the permanent policy, you can actually use the savings when you have something called cash value. Now, why that's a big deal is that, let's say you have an emergency or something happens, or there's some business opportunities or something comes along and you just need to take money out of the policy, you can. It's funny, I actually used my cash value in my policy, my recent policies. Once I got in the industry, there were some things I needed for my business. I was actually waiting for some funds to come in. I didn't want to pull out an emergency fund. I said, you know what? let's just pull from the cash value from the policy. We pull from the cash value of the policy, and the cash value was still making interest, even though we didn't put the money back in there at that point. So children's education is a great thing for permanent policies. It's a great asset for kids. A lot of wealthy people have decided, instead of using a 529, nothing wrong with a 529 plan, but instead of using that type of college plan, we'll just use this, because essentially the child has more options. Now, other things like living benefits, which, like I said, we'll talk more, but they have living benefits in permanent policies. And then we're going to get to more of the exotic things that everybody always talks about. Everybody always talks about all the things on the internet, about the index credit and IULs and whole life and infinite bank and all these different stuff like that. Let's talk about some of the exotic things. Well, index credit strategies. To make index credit strategies very simple, there's permanent policies that will mirror the market like a S&P 500, and they will give you either a portion of the gains, or in some cases, most of the gains in the market, depending on the product and depending on the company. And what it does is it gives you different strategies. So S&P 500, there's NASDAQ, there's Dow's proprietary strategies. And what it allows you to do is make money in the market without the risk of losing it. That's pretty much index credit strategies. Now, you have guaranteed lifetime coverage, meaning that you can actually buy a policy today and have it for the rest of your life. But here's what's interesting about guaranteed lifetime coverage that a lot of insurance agents, and for some reason it's not talked about, is the fact that you can pay off an insurance policy and still keep the coverage. That's a very big thing. Pay your policy off, still keep the coverage. And when God takes you home, when you pass away, guess what? Your family's going to get that benefit, even if you hadn't paid for the coverage for the last 10, 20 years. That bad boy can pay off just like a home. That's one of the biggest advantages to me. Now, tax advantages. You know, there's a lot of tax advantage type of accounts and assets, but let me tell you, life insurance has 4 tax benefits and advantages that people should know about. Here they are really quickly. The first thing is that your money in your policy in the permanent section can grow without paying taxes. So you can pay tax deferred. The second thing is the fact that you can actually pull that money out at any time you want through various strategies like loans, which of course, I would tell people that there's different types of loans, but a lot of people like to use something called a participating variable loan, where they can take the money out and it still acts as if the money's in the policy. So, well, you can do that and you don't have to pay tax when you take that money out. Now, number 3 is the fact that you can actually have your policy set up to give you a retirement income, kind of like your own pension for the rest of your life. Here's what's so crazy about that. The fact of the matter is you won't pay taxes on that either. And then last but not least, that policy turns into a death benefit and it goes down to your family without them paying taxes. That's 4 tax advantages. Great things to use life insurance permanent policy for. Then there's a few other things like real estate investing is a very popular thing. I wish I had the time to go through way more detail with that, but I can tell you that real estate investing is something that people will buy insurance policies, and then they'll buy a property. And before they buy their property, they'll take the money from the insurance policy, use it as the 20% down payment for their investment property. While it's getting invested in the real estate, it's still gaining interest inside the insurance policy. So you're getting interest from the insurance policy, it's making some net return. And then the real estate property is, of course, hopefully gaining in value as well. And then, you know, talking about 10, 20, 30 years down the line, you could have completely doubled the real estate investment, all by pulling your money from the right place. Then you have things like become your own bank. This is very, very popular right now. Become your own bank, infinite banking. Now, I will tell you, it is a strategy. It's not a product. It's a strategy. And it's a great strategy for people who understand how the strategy works and you get the right products. But become your own bank is very simple. Building up an insurance policy where you eventually cut the middleman, the bank out, and you become your own bank. Where you use that to buy your homes, buy your cars, buy your boats, retire, do many different things. And instead of loaning from them, you loan for yourself and you still make money. That is becoming your own bank. And there's there's a lot more to talk about that. That would have to be a separate video that I would have to make about becoming your own bank. But I can tell you it's an amazing strategy if you know how to set it up right, if you have the right income, if you have the right savings, and if you have the right strategy with the money as you become your own bank. But you're pretty much working like the bank. Now, last but not least on the advantages is retirement income. Hey, retirement income is one of the best things to use for an insurance policy, especially because you got tax advantages. And you can even set some policies up to pay you for the rest of your life, like a pension. It's really good advantage that a lot of people like to use it for. And of course, with right now where it's getting harder and harder to retire because of inflation and people are living longer. And because people are living longer, they're of course not working as much in their older age because of technology and they're out of their prime working years. Well, having an income from an insurance policy that you don't have to pay taxes on is a great advantage. So people love to use permanent policies for retirement income. Now, we talked about 3 types of policies. We're going to take the last couple minutes to go through a few more concepts on what type of insurance, maybe why you should buy some insurance, what category you may fall in. And I am even going to give you a strategy on how you should calculate how much insurance you need. Now, do you have life insurance through your job? Here's one of the misconceptions. People buy it through their job, and one of the best reasons to get it through your job is that it's affordable. But here's the issue with getting it through your job. A lot of companies don't allow you to keep the policy when you leave, or it changes, so it doesn't follow you. Another thing is that your rate can increase dramatically in the future when you leave that job, or you could even be risk of being ineligible for policies and altogether. Then the other thing is the fact that, hey, you have no living benefits with your job. You have jobs that workman's comp to take care of you, but what if something happens to you? What if you get terminally ill and you got, 20, the doctor gives you 24 months to live? Is your job going to give you income for 24 months? What if you have a chronic illness and you can't perform 2 to 6 basic living activities, for at least 90 days or more? What's going to happen with your employment? Or will you maybe you still have your job, but you don't have income. And then there's critical illness, like cancers and heart attacks or critical injury. You get in a coma, you get paralyzed. There's a lot of different things. What if these things happen to you and you have no capital, you have no savings, you have no investments to cover you? This is where living benefits come into big place. So we really tell people getting insurance through your job, not a bad thing, because it's going to probably be very, very cheap. But on the other side of it, you got to have other insurance policies that provide that extra protection that have something called living benefits. Of course, if you qualify, because everybody does not qualify for living benefits if you have certain pre-existing conditions. Now, let's talk about do you just have a need? So let's talk about some needs that people most of the time have: immediate cash needs, ongoing needs, and business needs. Immediate cash needs are things like final expense and burial, paying off debts and mortgages, an emergency fund, and of course, we talked about in the permanent, setting up a college fund or a trade school fund. So that's some immediate cash needs. Now, what about ongoing needs? Well, income replacement. Hey, I want to retire. I want to be able to have some income replacement, childcare, supplemental retirement, chronic illness, and long-term care needs. This is one of the biggest things that people don't even look at. It's a killer of your wealth, a killer of your retirement is long-term care needs as you get older, as you get weaker in your older age, if you need help, and then your savings and your retirement gets depleted because you need long-term help. Well, why don't you get a policy that's set up for that? And then if you're a business owner, there may be some very simple business needs. You are the key person in your business, or you're one of the key people. And if something was to happen to you, you can now not be in the business, and your business takes a 10, 20, 30, 40%, 50, 100% loss, right? Some people own their business and it's just them. You're a solopreneur and you're not around. What happens? Well, you may need an insurance policy that covers your business because you're a key person. Buy-sell agreement funding, executive benefits, right? Executive benefits are getting very popular with life insurance, where people say, hey, you know what? Give me, like people give stock options. People, hey, give me some benefits with my life insurance policy that I can have instead. Then there's collateralized debt. So there's a lot of reasons for business needs. That's a whole other video. This is a simple life insurance guide, but I would tell people to look at some things. Let's talk about determining how much insurance you need with dime method. Now, the dime method is it's just a very fun, simple way to figure out, man, how much do I need? And I have some examples here. I would, of course, tell you to look at these examples. But in this, the dime method is very simple. It's debt, income, mortgage, education. And debt is, hey, outstanding credit cards, student loans, car loans, medical bills, things like that. You say, hey, I need to put all that together and add that together. That's your debt. Then you get your income. You take what you make. Let's say you make $100,000 a year. You times that by 10. then you have $1 million of coverage of income that needs to be covered. And then there's mortgage. How much do you owe on your house? Not how much your house is worth, but if something was to happen to you, how much would you owe? So something like, hey, you know, I have a $500,000 home it's worth $500,000, but I owe $300,000 left. My mortgage, okay, you add that together, and then you have the education. Let's say, you know, you have kids that want to go to school, and so with kids wanting to go to school, you say, well, look, let's take that and let's add that in there. If I'm not around, I would love for my kids to still have the proper education. So you add that in there. In our examples, we have an insurance need of $1,193,000. Now, how we got that was there was $8,000 of credit card debt, plus the $35,000 of car loan, plus the $60,000 of income of 10 years, so that's $600,000. They still owe $400,000 on the mortgage, and then having 3 kids with, you know, college, $50,000 a year for $50,000 for the college education, brought it to $150,000, and that's how I was able to figure out the need. This is a part that I would suggest you do for yourself. It is a great thing to do to figure out how much insurance you need, and of course, that helps with finding out what type of coverage and features you want, like we talked about before. Now, last but not least is the most important step. We went over a lot of information in our short time together, and I know that I wasn't able to go through everything in detail, but here's some important steps. Well, you got to implement as much as you can afford. It's very simple. What can you afford to put in? Now, I always tell people, you know, people say, man, well, when's the best time to start investing, start saving, to buy insurance? Well, it was probably 10, 20 years ago, right? 30 years ago for some people. When's the next best time? Today. And you got to really look and say, man, can I not afford to put things away for my future? And of course, we all know the answer. Then you got to reconsider objectives if necessary. Maybe you've had some objectives, you've been using different things. You say, you know what, these things aren't working for me. I need to look at other options. I need to look at what I can do with what I have. Maybe my objective of only having needing $1 million for retirement was not really enough. Maybe I really need $2, $3, $4, $5 million for retirement, $10 million for retirement. Now let me actually see what I need to do to get there. Consider short. You also need to consider a short-term solution to a long-term need. It's very simple. And say, you know what? I can start today with something, or I'm already doing something and I need to reallocate, and I can do this. But if I start today, it's a short-term solution, but it's going to give me that long-term need. It's a short-term solution that's going to give me a long-term need, because I'll be able to take care of things well in the future because I'm doing it today. And even though every month, every year, you know, every quarter, you could be putting in X amount of dollars. You're putting in $100 a month. You're putting in, you know, $100 a week. You're putting in $1,000 a month. You're putting in $5,000 a quarter. You're putting in 10. You know, some people's like, hey man, I've got some money. I'm doing pretty well. I need to do a lot more than that to retire in the next, you know, 5 to 10 years. Hey, let's go ahead and get that in place. And then, of course, consider using more than one type of policy. This is one of the insurance hacks that I wish I would have knew when I first started learning about money and get my finances together, is that there's a lot of reasons to use different type of insurance policy for many different things. So, you know, I tell people, hey, you know, me, myself, I have a couple of different policies for different things. I'm a believer that there is not one bad insurance policy, but I think there can be bad designs. I think there could be bad strategies, but I'm a very big believer in having multiple different types of insurance policies, just like I'm a big believer in having multiple different types of assets and investments. Matter of fact, I like to tell people I have 3 basic rules of life when it comes to me. I believe everybody should have a business. I believe everybody should own real estate, and I believe 100% everybody should have life insurance for those different things. Now, with that being said, you can definitely contact us to get more information. Of course, we have a disclaimer because this video was education purposes. And a big part of this education is to help people. Of course, many of you I may not ever meet in person. I may not do an appointment with you, but I would tell you to make sure that even though I gave you a lot of great information, you sit down with a professional and learn more about these concepts that can be, you know, a great thing for you. because even though I may have given you a lot of the secrets, you may still need help with the implementation. Now, with that being said, I have to, of course, say this. If you got this video from us or you found it online or many different places, because this is going out to a lot of different places, and you do need a professional, you do say, you know what, I really like Joe, I really liked you. The person who sent this to me, I really like who they are. Then my thing is, hey, come see us, come see my office, New Modern Wealth. We have many different branches with us and companies and agents with us, and we're constantly growing, and we're super proud to help anybody. You can only imagine if we've given you this type of information for free. This, and like, ask yourself, how many people are giving this to me for free? You didn't have to sit down with me, salesperson. You didn't have to come to my office. We didn't do a Zoom. You got this valuable information for free. Imagine how we're going to treat you when you actually become a client, when you actually go through the process of finding what works for you. So with that being said, I hope that you believe, and I have some more merch coming out, shameless plug, but I hope that you got the education you was looking for. I hope that your goal is to build wealth just like ours and help families become free. And if you really did enjoy this information, you say, you know what, more people need to know about this, please, 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 please share this with someone. You have no idea how this can benefit many people. With that being said, future looks bright. Cannot wait to see you on the winning side.